Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at the first quarter results of two stocks on the stock exchange, Massy Holdings Limited and First Citizens, for the quarter ended December 2016. And that in the case of both Massy and First Citizens, that's the first fiscal quarter for each company. Turning quickly to Massy, Massy delivered earnings per share of $1.42, which is in comparison with a 4-cent improvement in its $1.38 per share, or a 2.9% increase. In terms of some key highlights, revenues remained relatively constant, just a small decline of 0.2%, whereas operating profits advanced 0.7% to $209 million. Profit before taxes were positively impacted by an increase in share of results of associates, which jumped $12.8 million, so overall profit before taxes improved 6.8% to $225.4 million. Taxes, however, did increase 14.5% from $64.8 million to $74.1 on account of green fund levies and other taxes, taking profits after tax up just around 3.4% to $151 million. In terms of segment performance, as we can see, integrated retail, which includes the Massy stores, would have increased around 11% from $113 million to $125 million, and similar increases in percentage terms were recorded in the energy and industrial gases segment from $52 to $58 million, as well as the financial services segment from $18 to $20 million. The ITC segment swung from a profit before tax of $2 million to a loss of $1 million on account of some costs attributable to Massy's new IPTV business, while the automotive and industrial equipment segment remained somewhat flat. Looking ahead, Massy's exposure to Trinidad and Tobago in terms of revenue by geography remains considerable, although it continues to move on a downward trend. And this is broadly in line with Massy's initiatives to expand into the region and also reduce some of its reliance on the Trinidad and Tobago domestic market as a whole. And as we can see, in 2012, revenues attributable to the Trinidad and Tobago market were just about 55%, and this has gradually declined to the current level of around 48% in the current period. And this has been supplanted by increases in exposure or revenue sources from Jamaica as well as Colombia and Guyana. Moving forward, the Trinidad and Tobago market continues to be somewhat challenging, and in particular, the second fiscal quarter and beyond for Massy will be impacted by higher corporate taxes, which came into effect in January 2017. At a traded price of $52, Massy is trading at a reported trailing multiple of just around 10 times and offers investors a trailing dividend yield of 4%. However, after adjusting for one-off costs, that PE multiple falls to just around 8.9 times. And again, the company is in a good position to preserve its absolute dollar dividends per share paid. So on this basis, we maintain our neutral rating on Massy. Turning quickly to First, net interest income in terms of some key highlights for the 3 months ended 31st December 2016 was $344 million, a 13.8% increase from the comparable prior period, whereas other income declined some 6.3%. From $191 million to $180 million roughly, bringing total income up 6% in comparable periods from $495 million to $525 million. Overall, though, a taxation expense, which moved from $40 million to $62.4 million, or a 55% increase, would have led to profit after taxes increasing just about 2.9%, or from $179.8 million to 185.1, and that translated into earnings per share increase of 2.8% from 72 cents to 74 cents. And that taxation expense is considerable, taking the effective tax rate from 18% in the prior period to just about 25% in the current period. Now, as we look forward, First will also be challenged with increases to corporate taxation, which will impact not just First or Massy, but indeed most of the companies listed on the stock exchange. And in terms of this share price movement, what we have seen is that First has been trading consistently within the $35 range. In fact, since its IPO listing, it has been trading at around an average of $35.50. However, as we can see, The share price year to date, despite measured performance and stable performance, has declined some 7.1%. And this could be in large part attributable to investors' expectations of the second public offering of First shares, which is carded to come around in this fiscal year, in addition to NGL and some other divestments of the state. And this was mentioned by the Minister of Finance in his budget statement for 2016-2017. And if we had to go by some of the numbers in that speech, the first share price on the second public offering could be somewhere in the region of around $30, we feel. And that's, of course, below the $32.50 is currently trading at. And the PE multiple applicable to a $30 share price would be about 11.8 times, well below the banking average of 14.3 times. So on this basis, in terms of stable performance, but in anticipation of the second public offering, we place a neutral rating on First. That's it for this week's edition. For more information on these and other investment teams, give us a call at 628-9100. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.